So, depending on how deep we go, I may or may not share this recording, but um, we're here. Um, Something doesn't jump out at me for you, Charlie. I don't think we've had any conversations recently.
We had ones in the past. I've been talking to Teak a lot recently, actually.
Okay,
Been working on some stuff with him, so.
no problem, no problem, no problem.
What's
So,
up, gentlemen?
guys, is it still two? A second. Well, three guys. It's three guys sitting on a call. Open mic, guys. If you want to share, just let me know if you want to share your charts as well. What's going on?
Can you hear me?
Yep.
Oh, okay, great. Hey, good evening, guys. How y'all doing?
I'm doing good. I just got back from Demon Slayer.
From Demon Slayer?
You don't do anime?
Oh, I know. Okay. Well, I like anime. My kids are a little young for some of the anime I like.
Mm-hmm.
And I'm at the beginning of anime, my friend.
It's one of those nights where you just take yourself out.
Yeah, my son's got Beyblades set up for Beyblade battles.
Ooh,
So your kids are a little young for that, and
definitely.
you'll know.
But I remember the pain when your Beyblade would fall apart.
Yeah, exactly. Exactly.
So as far as your trading careers or your trading journeys, anything you guys are working on, anything I can help with?
Personally, I've been like I mentioned, I've been talking to Teak a lot. We've been going over a lot of focusing heavily on more hourly ranges and going into those 84-minute cycles, but specifically more going into I guess 36 minutes in,
Mm-hmm.
kind of just witnessing what kind of happens in levels that get respected within. And one thing I thought was interesting was kind of like the 12 p.m. delivery today, or I guess depending on what time frame, or UTC -5 or 6 or whatever you fancy there. The second to last cycle, I thought was pretty interesting. And again, it comes down to kind of news sparked it, but um, there was just some interesting levels I felt like in the afternoon session today that I had some pretty good short scalps off of. Um,
Okay.
uh, so I've just kind of been going into depth with a lot of the stuff I talked to him was just kind of 3-bar swings and stuff like that.
Mm-hmm.
Um, and that just kind of really helped a lot of the uncertainty I had in my trading in terms of just patience. Um, if I'm, not ready or taking trades too early was a big thing in my earlier trading that happened. Rebar swings and focusing on just kind of breakouts and how we break out and just structure shifts after that. Um, I guess it's not a huge talking point in terms of that. It's kind of more of like just a personal thing that just kind of helped me with patience overall.
All right, no
Um,
problem, no problem, no problem.
but yeah, I mean, you,
Um,
you must be holding short from what
no,
the
well,
the the exact high I'm assuming there.
I did play a lot of shorts inside here from up here, but my plan was to use the fund accounts and kind of establish my name back in prop firm territory, but the live credentials are not coming through. So
Okay.
I'll be
Yeah,
like, yeah.
I'm on Twitter as Blaze Trade. I saw people talking about
Oh.
some sort of funds being acting like you don't have the funds. That's why you're acting with prop firms, and I thought it was just funny to
Right?
see
I've
people
been
kind
away
of
from prop
calling
for
you
so
out.
long,
It's
man.
like, come on, man.
But I find
But
it funny though that, challenge verification passed FTMO now apparently has this new thing called FTMO identity. I don't know if anybody's with FTMO. So you have to verify that you're a human being before you can sign any contracts. So they've been verifying I'm human since February 29th.
That just high frequency stuff. Like they were just making
We've
sure
been
you're
trying to
using that.
verify that since I've been here.
I'm keeping it on a level. I'm just using one H1 swing, enter, hold, pass. That's all I'm doing. Nothing, no back and forth, anything. I only did that on the last challenge I did. So I'm just racking them up, two 10K, 25K, another 25K, and then a 50K. And then that should be enough to get them looking in my direction. And then once I have their attention, I go from there because I'm trying to get into quant lane to do some stuff. But anyways, I wanted tonight to be more about um putting things together for everybody or for anybody that's on the call who's willing to be open and honest about where they are. Just to talk through a couple stuff, maybe a little reminder about um things that may or may not have been remembered. But I was hoping you guys would guide me. So if you are so inclined, please feel free to share whatever you're struggling with, whatever you need guidance with, and let's talk about it.
Personally, just in reflection, hey Teak, just in reflection and to piggyback on what Charlie had spoken, the biggest thing for me to work on is that patience of waiting for the dealing range to form, because if I get that early entry that leads to too much drawdown, that's where I found myself taking myself out of good trades. And so my first reaction to that was to simply not take myself out of the trade. And then upon, looking into it a little deeper, it's just because I'm entering too early if the DR hasn't formed and suffering that retracement. I don't think I need help on that other than I need just to simply do what I know I need to do.
Right. Okay.
And then you see what I'm working on, which is kind of craziness. So, which is insane. It's wild. It's
Since we're
insane.
here, let me just say that I appreciate you, sharing those. Let me know and letting me know what's going on with you, so I have an idea of where somebody is. You guys are very shy these days. I don't know why. Maybe it's because I'm busy. You don't want to bother me. But when I get moments like this, I appreciate a conversation, or I'll run through as much, as many DMs as I can. So, yeah, thank you. If nobody has anything to share, then I'm going to go down a little generic path. So I'll allow anybody who wants to talk now to hop up and take the mic.
What's up, Kish?
Hey.
This is good. What's going on?
It's good. It's good. I forgot that this is your time zone.
Man, I'm just doing some study. I saw a Zoom link. I was like, what's going on here? Love it.
So,
That 80-point drop, I took a small short and closed it before I got home, and it went exactly to where it was supposed to go.
I have some rules about controlling myself. And one of them is, one, you don't do challenges in the nights. Everybody knows that. You don't add too much or too many positions before equities open. Again, everybody knows that, because then you end up in situations where you take a little bit too much losses in the morning, and then when the good setups come, you have to dial back, right? So kind of revisiting stuff like that. Stuff like, if I'm not home and I'm anywhere in a waiting area or a lobby and I feel bored and I want to trade, I can't trade with size. So I'd usually grab like, depending on the mood, right? $25, $50, $100, $1,000, depending on the mood. I just play around a little bit. Today was one such day where I was playing around with $25 and pretty much just holding the setups and then just compounding. And it ran. I was in the short, I think somewhere inside this H1 candle open, somewhere in here, playing around that. But a lot of persons probably wondering, why tonight? Why didn't I just come home and go to bed? It's been a long day. I've had a lot of conversations this week in particular, and I realize that they're all coming around the same topics. So today I was talking to Leon, and after his questions, I was like, you're inspiring me to do a YouTube video. So I was originally going to do a YouTube video and just go off and talk about some stuff. But then I'm like, I've been away for a while, and there are a lot of guys in the community that haven't reached out to me for whatever reason. And yeah, I feel like you guys deserve the time, the free time I'm able to make instead of just throwing up a YouTube video. So that's why. So one more chance for anybody who wants to talk, and then we jump into some generic walkthrough processes.
Yo, Kish.
Hola.
You have the stats on me, basically, from the group.
I know that voice.
Huh?
I'm saying I know that voice. I'm just playing around.
And I'm just working on upping my win rate at the moment. It's not nothing else.
All good, all good. For anybody who doesn't know, that's Anne. He came up with a great initiative that many people don't know about, which, for accountability purposes, there is a group called TCM Capital, where they came up with the idea that at the start of every week, they're going to post their analysis for the week. I don't know if they're trading challenge accounts, demo accounts, or funded accounts, but they're
Both.
posting their track records and everything, for each other to criticize. And it's a small group, and I love
that's
that
an enigma.
that's been created there. So since everybody got a chance to talk, no for the generic stuff, brace yourselves. Okay. Everybody is trading, and I think we take a lot of time focusing on the wrong stuff, or we take a lot of time looking at trading from the wrong angle. And because of that, it's preventing us from either remembering what we're doing or what we should be doing. And just we're being pulled in too many directions. Okay. So let's have this conversation on the basis that somebody in my community, let's say a friend of mine had a son, and somehow they're like, hey, I heard that you're into trading and blah blah blah, and I've seen a lot of stuff online, and I don't know how to filter through all those stuff to create something that works for me. What do you recommend? If I was to take someone like that under my wing from the get-go, like before they get indoctrinated or before they get swept off with the guru stuff, I would try to get their mindset right first, just so they know what we do here, why we do certain things, what we consider important. Simple. Not anything technical, just foundation that's enough to have them thinking on their own. Because I think we get pulled too much. Take a look at me, for example. Nas is making all-time highs, but I'm adamant that that's madness. Why don't I follow the trend? Why don't I just buy and hold diamond hands? Why am I not doing that? Why am I taking losses and I'm okay looking at shorts, or staying out of the market until there's a short setup? It's simple. For me, trading is not about looking for an entry, looking for market direction, entering, and all that good stuff. It's like hunting, okay? And if I'm hunting in the market, you have to prioritize what comes first in your hunting process. we have to look at it like that. And hopefully, if I explain it this way, it will bring some perspective so that persons can recognize what they're missing in their own process and what are some of the things that are holding them back. Okay. So let me pause for a second and ask you guys a question. If we were hunters, let's say we're a pack of hunters right now, we're a tribe, all we do is hunt. This is a trick question. What would be the most important thing that you want to understand if we're going to go hunting? I'm telling you, this is a trick question because your mind will automatically just jump to an answer. And I want you to pause and think about it before you answer. So I'm telling you in advance, it's a trick question. What would you consider important?
I would look at the tools that you're hunting with. I don't know if that's right or not, but that's one of the things I'll think about.
Yeah, and the people,
Perfect point.
because that's
Yeah,
that's
I
going to
consider the
dictate.
prey, like what the pattern of the prey and kind of.
Okay, so prey, how they move, good. If you want to go as far as said their footprints, perfect. The tools they're going to use to hunt, perfect. Anything else?
Location.
Location. That's the first thing I wanted us to start with. Simply because if you're a hunter, right? Nobody goes hunting for whatever is out there. Literally. Nobody says, okay, to them, I'm hungry. I'm just going to go out and the first thing I see, I'm going to kill and eat. Unless you're Peter. If you get that joke, we can be friends. If not, then ... If you go hunting, or if you are going to go out hunting, the first thing you're thinking about is, I'm going to go to this spot, then I'm going to look. And based on what I see, I'm going to decide if my prey is there or not. Simple. There are times when, because of personality, you might be so confident that you say you're just going to go out and anything you see, you're just going to hunt that and that's it, and you come back in. While reasonably, we can understand that that's something that you can do from time to time. You could do that consistently for a while. Eventually, you're going to be looking for the right things in the wrong places and you will find nothing. Whereas if you're always looking at the right place, sometimes you'll find your textbook a perfect prey. Sometimes you'll find, not the perfect prey, but something close to that. Sometimes you'll be stalking the perfect prey and it's just not there for whatever reason. And that's fine because you're a hunter, you do this every day. You understand that once you keep looking in the right place and you know what you're looking for, once it's there, you're going to get it. If it's not there, you're not going to decide that, let me just shoot this rat because this rat is here, or, this bug or whatever. You're going to be comfortable knowing that this is the pattern of the animal I'm hunting. This is where it's supposed to be. It's usually there at this time. I'm sitting here for X amount of time. I don't see it, and that's fine. I did nothing wrong. Okay? It's just one of those days. No, everything about that scenario makes sense. I don't think anybody disagrees with that hunting scenario. So why is it that, we go trading and the first thing we're thinking about is our own liquidity. First thing you're thinking about is a CSD to enter. You don't know where this CSD is happening. You don't know why this CSD is happening, but it's a CSD, and you know that a CSD leads to an entry, so why not? Then you end up in situations where sometimes you just see a CSD, and because you have a preconceived bias from the previous day, it's in favor of that bias. You just take that trade and it works. And then there are going to be those times when you take those trades and it looks like it's working, but you hold on to it because why not? So you spend a whole lot of time or a whole lot of energy hoping and praying the setup works because the CSD is there. and clearly the order flow is bare, so why don't the market move? You know, I'm short. And you'll find that holding on to these trades that don't move in your favor always or most times lead to a bad day. You lose, or it really, really screams against you. But then every time that silly approach works, you forget that idea that sometimes I see something crazy and I hope it's playing out, but it doesn't. So the next time I see it, the moment it looks like it's not going to play out, I'm done. I'm out. I'm gone. We don't think about that. We like to hope it works out this time, and every other time that it didn't play out is just, you know, not my fault. So it's the first thing I want to bring to everybody's attention, so that if that's what you're doing, you could say, you know, that's really what I'm doing, and I really should stop. Or we bring back FOMO into our trading. Most persons who have been trading for a while, they no longer care about FOMO. You're so confident in your process, you don't care if you're sleeping in London and something runs in London. You don't care. So at the back of your mind, you don't care about FOMO. But at the same time, you open the chart. It's a couple more minutes until something should happen, and you want to enter now, lest in the next couple of minutes it really starts to run and you miss the move. Okay, so we are sabotaging ourselves because of those two things. First thing is, you're looking for something in a not ideal area, when the ideal area is something that you already know and you should just listen to it. Let's take trading, for example. Like, let's go back to the daily chart here. I don't remember which trader blueprint video I mentioned this. I said there's only 3 time frames you really need: daily, the H1, and the M5. And for that reason, I have consciously removed the notion of a 4-hour chart from my process. So a lot of 4-hour levels I won't see, and I really don't care about them. Okay, because I understand that it's not a time frame that's going to lead to profitability or understanding. It's really not a time frame. It's understanding the process by which something should happen. So to make it basic, every time we want to trade, you want to have conviction in the direction the market is expanding in. Basic stuff. I'm going in the market, I'm looking for sells, I think this market is going down. I'm looking for buyers, I think it's going up. Once I'm convinced of the direction, then really the only thing I need next is, where should my setup form? But I find that based on the conversations I've been having, based on the guys who've reached out and shared that it's been a while since they're doing this, they're not seeing the results that they want, the setups that they're sharing is still missing that element of, this is where my setup should form. Why? Because this. Why not? Because that. It's all, I understand what the footprints look like. I understand what a CSD look like. I understand what the OLR look like. This is a OLR, hence this is what I want. Or something closer to home, a CSD is a powerful confirmation tool, but there are instances where you don't need a CSD. I find that persons are imposing the need for a CSD in order to get in. Okay? And I'll give you an example. My oh, anybody, so I did something and I lost my favorites bar. I don't know how to get it. It's gone. Anybody knows how to get that back? I don't know. I don't see anything over here.
Yeah, click on one of those tools. So just there's a little side arrow
Yeah.
next to the tool.
Thank you. Got it.
Over here. Oh, you got it. Yeah, cool.
Okay. I've been convinced that this is the quarterly high. Okay. The market showed me otherwise. When this is happening here, I don't want to participate as long as the market's above here. Plain and simple. As long as the daily chart stays not closing below here, I don't want to participate. Or I don't want to participate with conviction. Not participating with conviction means even if I do get something in my direction, I have to understand that this could be a short-term setup and it might not really expand. If I have conviction that the expansion that went through here is not sustained, i.e., we're not showing willingness to close above that high, then I can think anticipatory price moves. Since it's not staying above here, this is what it could do. So don't get lost in highs, higher highs, buys. Look at the levels. Start by looking at the invalidation of your setups. And that gives you the conviction to say, I don't have to do anything here because the directional premise I'm looking at is still in play. As long as the market is willing to close below here, I don't care what the delivery looks like. We could even go into the delivery. I'm convinced that the direction is lower. As long as the market is willing to close below this old high, I'm convinced the direction is lower. The delivery, however, might not just be open, high, low, close, or open, wick up and die. In order to get that type of details, we really need to look inside the price action. One of the first things I like to use whenever markets are breaking highs and lows is, do we break with a FEG? Is there an FEG in the stop one leg? Things like that. It makes life easier because we know the market is always going to be reaching for liquidity or imbalances. If it's reaching for liquidity, it's going to continue reaching until it gets there. If it's reaching into an imbalance, it's going to do one of two things: partially fill, complete fill. Simple. Every time the market completely fills a FEG based on what the FEG is, there are some things that automatically say this price delivery suggests directional premise. And that's really what we need. Okay. FEG in the stop one leg gets closed below, you're bearish. I don't know what the setup is going to look like in this candle, but I know that since this is my key level, which is the old high, something is going to print on a lower time frame close to equities open or after equities open. That's going to set up my trade. I can trust that. I don't know what it's going to look like, but again, I'm going to hunt today, and I know where to hunt. I know what I'm hunting. I'm hunting OLRs, overnight session high taken, wick above overnight session and failing to close, liquidity run, CSD. I know all of that. Those are the things I'm going to hunt. Those are already ingrained in my brain, in my playbook. Everybody knows what the order block, FEG, all that good stuff looks like. When you know where to look for it, that's even better. This FEG in the stop hunt leg is a very unique one. And this is something everybody should know. Why? Attention to details. We have a FEG here created by one big candle, like they usually get created. But we have the FEG being closed by one candle. ICT, our classic ICT definition, these type of FEGs create your BPRs. So while there are times when, let me see if I can find one. We have a high here, FEG here, BPR right here, right here. If this is a BPR, this is going to act as support. But take a look at the difference between this FEG here and this one. There's a clear difference in size. We've used this one as well. Big FEG created here, that's not closed in. That's not a BPR. So depending on your FEG classification, you can have BC or CP or whatever we call there. But that's not the point. The point is this one right here. FEG, one big candle through it. If you're a big FEG fan, you could find 50%, do all the good stuff. But if you're just reading the price action for reading the price action's sake, this old high here with this FEG means bodies below it and we stay below it. That automatically says this down candle is not a down candle I want to see its high taken. Even if the market retraces all the way to the open, that's not a candle I want to see the high get taken. What's going on? Something feels weird. Can you guys hear me?
Yeah, you're just a bit staticky.
Yeah, it's
I
just
think
a little
probably your internet.
choppy.
Yeah. I could feel it.
Feel like.
I don't know.
It
No, I can
wasn't too
actually.
bad. I mean, we still heard you. It was just a little bit.
Okay. So, for narrative purposes, if I'm bullish, okay, I'm going to demand a couple things from the price action. And one of the first thing I'm going to demand is this down candle's high be taken. Okay, if I'm bullish. However, if I'm bearish on the market, I'm thinking this candle's high should not be taken. If there is some type of aggressive news event, allow for the open to be traded to. Allow for the market to just wake up and then die. Something like that. Some type of internal run. Because this FEG is there, is a whole daily high, which is a bullish array. With a bullish array essentially being destroyed here, I don't want to be a buyer. It doesn't matter what lower time frames look like. I'm going to go into the lower time frames with the expectation that this bullish array has died and something bearish should print there, whatever it is. Anything that prints, I just need to be able to recognize it. So today, in today's call, or yesterday's call, we went to the H1 chart and we're just looking for what is being printed at this blue line that gives us a bearish undertone. First thing we saw, FEG right there. That's the first thing we saw. We don't have to think about anything else. We don't have to think about anything too technical. I have my directional confirmation. I have my quote unquote key level where my setup should form. The only thing I need now is time to support my key level, printing what I want, and I'm going to execute. Simple. How it gets printed here is the easy part. So we don't start out thinking, because its equity is open and because I'm bearish, I just want to see an OLR of any level or any failure swing. I'm thinking in terms of if this market is going to print perfectly from a higher time frame, this is where it should be. So I don't get lost in a lower time frame delivery and think, why is this retracing so far? Why is this doing this? From time to time, those things can happen, but they don't catch you off guard because you're not trying to force the market to do something because you understand what the biases, which is what we do a lot. This is the FEG. I'm expecting this FEG to work. I just need to mark FEGs from there to there. I don't know what I just did, but it's gone. The only thing I'm interested in now is being in the market as close to a certain time as possible to allow for the price delivery that I understand to show up. That's all. Jump into the M5. Here's my key level. I want something to print there. This is equities open. We know what equities open volatility does. CSD. I think this is what we shorted today. There's a trade. Market came back up here. If you think about this blue line in the same way we did on the lower time frames, and you watch the delivery here, okay? It's doing the same thing. This is, I'm gonna take it off, and I'm going to use this high just to illustrate that the concept is the same, okay? This is the old high. This is the close above. This is the stop hunt leg. So what do we want to see? The FVGs in the stop hunt leg. What's happening there? FVG right here. If you're doing early confirmations, there's two. This is the entire stop hunt leg. Not all of this part. There's two FVGs there. You could use a second one here. A close here has you anticipating this is going to get closed next. Sell side liquidity over here is going to get ran next. You could get technical and look for which sell side liquidity you want. That's the easy part. But the part most persons are not looking at is this is an old high. This is a bullish array. An old high is a bullish array. This bullish array here is holding. I need something that tells me the bullish array is going to break down or wait until the bullish array breaks down. Simple. It could be any of those. We could be trading, and I get this off here just to simplify. I identify the stop hunt leg. Bam. They're cushioning. No trading until the market closes below here. Market closes below here. I want to sell. Now that I want to sell, just take a look at what do we have available here? A million things can happen. You could look at dealing range. You could look at order blocks. You could look at the relationship between the highs, breakers versus mitigation block, all that good stuff. You could look at order blocks. You could look at EOs. You could look at anything here. And it should work because you now have context coming before that structure starts to print. We miss this, so what? We miss this, so what? Old bullish array broken. Not the type of person that says you flip levels and all that good stuff, but right? This is the last expansion right here. Why not this to this? Because this is not a dealing range for me. This is not the last time, this is not the first time sell side liquidity was run. Sell side liquidity was running here. If I'm thinking dealing range, I'm fibbing here to sell side liquidity being run. If I'm specifically looking at this candle's low, 1155, as sell side liquidity, it was taken here. So that's my fib. If I'm thinking the market is expanding, this is the expansion. After an expansion, you get retracements. You don't get expansions and then oil arts. Expansion, then retracement. This is the range from here to here. And I'm going to use this one and not this one. From here to the first low, I want to short in here. Don't think about the 50% level for a moment. What's the bearish array inside this range that I can short? This is not a breaker. This is mitigation. Old high. Last area of order flow. There's a million things you can find here. You don't demand precision. You don't demand perfection. You demand continuation of the narrative. This is closing about 50%. Okay, what does that mean? If we're closing about 50% in an up candle, I don't want to force the market to go lower if it's staying above this candle's 50% or this candle's high with a body. Anytime the market expands, and you could look at anything, just look at any movement, any aggressive move in one direction. Last year I told you this. The continuation moves happen when we destroy the last time the market expanded like this. So if the market is running down like this and it goes up, when it closes below here, it should continue lower by like with speed. You could use that anywhere. This is expanding lower. This big down candle here, it's retracing. That's normal, no big deal. Even if I'm overwhelmingly bearish, that's fine. When it closes below here, I want to see willingness to really move. How do I anticipate just how far up it could go? Look at the order of delivery. Then we have unfilled FEGs inside. Then we have imbalances inside that need to get traded to. Do we need a premium run based on the size of the range? Is there an order block inside of the range? Is there any arrays inside of the range that we should trade to? But once we start closing below expansions, expect speed. That's how you start cutting trades that don't make any sense because it expands and it's failing to continue the aggression that came with the expansion. This market is running up. Is it closing above these big candles? Yes. What if it was a big up candle and then this was a wick and it's closing below the wick of the other candle? Something is going on. You don't trust those expansions. So see this big candle right here, or relatively big. This is closing below the wick. I don't trust that. Closing below the wick, I don't trust that. This is not giving me, we're screaming higher. We don't get that. Market drops, okay. Internal liquidity run. It's not closing below here. This is not expanding lower. It starts making big candles again. Now it's closing above the highs. Risk can be taken here. Once the risk is taken, you're looking for the last expansion higher to give you a close above that, and that's continuation. So it could be any highs. And if you start blending that with the things you know, if you have a liquidity and we're wicking above it, the next time we close above that wick, you know what to expect. If it's closing with an FEG, you know what to expect. So you're not thinking, can I do this now? Can I do that now? You're thinking, because this prints, this is what should happen next. What supports that idea? Look at all these expansions. Close them above the high, close them above the high, close them above the high. It stops closing above up candles high here. If I'm a, that type of person that just says buying pressure or selling pressure, then buying pressure is decreasing now. If buying pressure is decreasing, show me confirmation that selling pressure is in the market, i.e., give me a CSD to the downside. Don't stress it, don't overthink it. If you're only looking at the market within certain windows of time, it should be easier to spot opportunities. What time is this? 12 p.m. Closing above it? No. We're getting CSD? Okay. The last day in the market, it was run buy side in a market that's not showing me it wants to expand. Find sell side. Create my dealing range. Take risk. Just that's it. Just trust that unless these things happen that proves the market is going in a particular direction, trust that it's going to go lower. No overthinking. Stop trying to force everything you know to work. Stop trying to be so afraid of entering because the entry is not perfect. What's the narrative saying? Do I have enough confirmation to enter before the market breaks this low? Is the market giving me enough to trust that the next expansion lower should be fast? Is it giving me confidence to say, I'm looking at this level, it takes the level, and the retracement is deep? How do I trust this is a retracement? How do I frame risk? How do I accept that this is what the market is doing here? I'm going to take that and I'm going to put my risk there and allow the rest to happen. I think that was an example of what we did today. This morning. Today is Wednesday. Somewhere here. If you remember the call from today, remember how we had the M5 candle framed, and I'm saying this is the M5 candle. Once it closes below here, it should run away fast. The M1 closed below it and it starts setting up the move. First thing I did, grab the M1 and frame the dealing range. The dealing range probably looks weird or looked weird to anybody looking at it because it wasn't at, lowest low, highest high type of thing. And now I don't know where it is, but if you're on the call, you know what I'm talking about. I think this was it. It was this high to probably, I think it was here. It looks weird, right? But that's the candle that creates the dealing range. I don't remember if it was exactly this one, but I remember it not being at the exact low. The moment it prints, you mark it out. So you never have to look in hindsight. You never have to look right to left. You read it left to right. This is the level. It's going, it's going. It took it, fib it. Perfect world. Internal liquidity. Stops at the high. It runs. What if you see something happening down here? Be willing to let that miss you because this is what the rule says ideal. You're not trading just to get in, you're trading. What does the rule say? The rules say, if this, then that. And that's so you can start finding invalidation before anything else. Because if this is expanding higher like that, you could do the same thing here, like this. This is a big candle. Are we still closing above that high? Nope. This is a close. But does this give me the same type of expansion that this is doing? No. So again, quote unquote, buying pressure is dying out. Take risk here. Take risk in this candle. If I'm precision oriented, I want to see buying pressure die out at that high because that's internal failure swing. What if it's not perfect? So what? What if this candle closes like this? Do I just sell the next candle if it starts to fall? No. I mark that level to keep myself on track. I enter my stop. Good. What if I enter in this candle because it's running up here and it's pretty close and close proximity entries are fine, and I have my stop there, and the market starts to come up again back at the same level? Based on your risk appetite, enter again. It's in an area where it's not supposed to. Don't over leverage, and hurt yourself. Just enter. Enter, manage the risk. If all your risk is on here, then no big deal. Let it play out. Big down candle comes up, you're thinking the same thing like this. If this is going to continue, the expansions, the initiation of the expansions must show me that. Close below here. It's starting to close. Now anything retraces here, I'm going to sell into until the objective is met. It retraces, there's an up candle. What do I do here? Nothing. It's an up candle. I don't know if this candle is going to close above that high. If this is an M5 chart and I'm watching the M1 and I see like the third minute is going above that and then M1 starts to pull back, I can start looking at M1 charts for entries. But if this is an up candle in an area where sell side or bearish objectives are confirmed, expect that up candle to do what up candles do in bearish order flow. Their lows give way and they act as resistance. Their lows give way and they act as resistance. You keep doing the same thing. You move this. This is the big down candle right there. I want to close below. Like this could be a complete model. I want a big down candle. I want to see a close below that. Then I want a bearish array to print. What bearish array? Anyone. We close, have an up candle. It's low gave way, sell it here. We have another big up candle, big down candle. Wait for its low to wait for to close below. We close below here. Do I sell into this? No, because that's not the rules. Up candle, it's low gave way, I sell into that. You need that expansion. There's no more big expansions unless you're considering this one. Just pretty relative. I think this is better. There. We close below, up candle. There. Did it slow giveaway? No. So don't try to sell this. Just like that. The midnight model. Kidding. Don't nobody reference the midnight model in the group. But don't ignore what I'm trying to explain here. Most persons already know what a setup looks like. It's the condition that gives rise to trust in the setup that most persons don't know. Everything I've just showed you has more venom to it than you realize, but you'll only see it if you look at it on your own. Every time I put the blue line on, it's essentially showing you where a key level is. So if you are a hunter and you now know exactly where your prey resides, if I'm knocking at your doorstep, I'm looking for footprints. If I'm knocking at the doorstep of my prey, I'm looking for footprints. We did not get a bearish footprint here. So everything we see here can be classified as a bullish footprint. This is the key level. How do I use this line itself to frame a bullish setup? Reverse everything we did here. I want a big up candle. I want a down candle's high to give way, then act as support. Look for that anywhere. That's it. Literally, that's it. Whatever else the market gives you that you can use to supplement your ideas, I cannot tell you exactly what they're going to be. Like, I cannot tell you that this is the level here. This is a down candle. It's high gave way and you bought here and you got stopped out. So that's it. I cannot reasonably tell you that there's a reason for that happening. I have to tell you to look at the different instances or circumstances around which you lose trades like that. And then you can realize, okay, there was something happening down here, then it pushed up. There were down candles below me whose high gave way. They didn't get a chance to act as support. There were FEG. I don't know. I cannot tell you exactly what's going to be there. That's why sometimes I say, if this is my level, I don't know what's going to be there on the lower time frame, but I know something is going to be there. When I get there, I just read. And realistically, even though this explanation is mechanical, if I just said that this is the level and something is going to print there, and you looked at this and you saw failure swings here, isn't there a reason for this setup to fail? So why would you put your stop where you expect the setup to fail? So stuff like that are, you have to see those on your own to kind of recognize that, okay, usually I put the 50 lot on, but because this is not A plus, put a 20 lot, something. Wait for more confirmation. And then you could keep that right there. You could look at when we close above that as the start of the delivery. You could start framing stuff like, that's my EO. Market came down. I don't know. You could start framing so many things around that, and it makes a lot more sense. We have big down candles here. Up candle, it's low giveaway. It did not act as resistance. If I sold this and I took a loss, okay, I got stopped out quickly. But I already have that key level that says, don't look for bear setups here. Look for bullish setups. What do I do instead? Down candle high. There. I want to see those down candles high give way and they act as support while big green candles highs are being traded through. Take a look at this. Before this down candle here was traded through, did we have a big down candle, big up candles high being closed above? No. Step one, big up candle. Nice. Close above it. Bam. Give me a down candle and take its high. No down candle, no down candle, no down candle. Da, da, da. That's what I mean? You don't think about buying this. You don't think about buying this as a retracement. You frame what you want to see. And if you're reading again from start to the delivery, all of those you could do. But I'm just showing you how simply refining what you need to see before you trust a PDRA, just open your eyes to a lot of the things that are potentially stopping you out. You could move this idea from a bar by bar logic and take it to swing highs and swing lows. Let that swing high act as an up candle. Close above it. Cool. Give me a down candle. Take its high. I buy. But where do I put my stop here? Well, there's that open FEG below me. I don't trust putting my stop there. Let me put my stop below the FEG. 10 points below the FEG. 5 point. That part you have to play around with based on the different examples you see to kind of gauge where you put your stop. If I tell you it's not going to do any good, you get a buy here, you get to trade. Comes back, your old level is holding, same thing. You go back to looking at, I have my highs, close above, down candle, early entries. This is taken, now you can buy a retracement. You start to see when you can trust your instincts versus when you need the candles to say something. Candles are saying, whenever we close above here, give a down candle, buy. But then, put that there for a second. This is the first thing you see coming up. All of this starts looking menacing. You start to decide, can I do this? Can I? No. It's always going to be something that tells you this is what you can trust. It's not about, I can recognize this. I can recognize that. You're going to try to track every delivery if you do that. And while it's fine and fun, there's a better way. You could look at high, close above, from that low. You could use the first 3 bar right here, but this is included, so that's not going to be it. So that's actually it. That's your range. You could look at, okay, we're bullish, we're in discount. Can I trust this? Can I take a risk here? It's expanding lower, but it's not closing. It closed above. Can I just buy the open of this and put my stop there? There's a million different ways you can do that. But there's always going to be that one thing that says, because this happened, you can trust something else. High, close above, down candle, take its high. You just buy this wick. Just buy the wick. Do what you want to do now. Your analysis says do nothing because it's solid. But the market may be slow and wicky and you're like, oh my God, what do I do? Nothing, just trust the analysis. Trust the analysis. Move yourself from thinking of everything to only reacting to the market if it does this. And you keep doing that. There's a high, we close above it. This sets the narrative for me to trust a down candle CSD. How do I frame a high? You could use 3 bar. Every time there's a M1 3 bar high, look for a close above it, followed by a down candle CSD. Same thing. But I'm all over the place. I'm taking too many trades when I do that. zoom out. Look at the M5 high, close, all that. Use both charts. Look at whenever a M5 high validates that we can start seeing M5 down candles act as order blocks. Then you look at that through the M1. The range is within the ranges that say, here it is. Look at the timing when it gets validated, the time when it gets the retracement, the timing when the order block gets confirmed. You start putting things together. It's no longer, you can't do anything unless time says it. You start seeing the narrative behind when you can trust something. You start seeing stuff like, this is overwhelmingly bearish. Bearish downside is confirmed, but the market needs to retrace. Why does it need to retrace? Because it hasn't created a bearish order block yet. Stuff like that. But again, I can't tell you that unless you look at the market through a lens like this, and then you say, because this happened, I can trust this happening next. It happens, execute. If you're studying, just put a line here, put the RR tool and journal. Put RR tool, identify logical target, could be a projection target. Just screenshot it and journal. This is what I see. This is what I'm expecting. Nothing else. It stops you out. Screenshot it the moment it stops you out. Where did you get stop out? Nothing else. Allow the market to print while you watch. See what you missed. Or enjoy the fact that you're now seeing expansions in real time. Either way, you develop a process that gets you away from thinking, then you move this into time-based charts. But you need the confidence to trust this first. And you might get losses. It's very likely you're going to get a couple losses. But the losses will show you something. Always. Anytime you get a loss, same thing. Same idea. You start seeing stuff. I can't tell you everything you will see. But yeah, my eyes are starting to give way. I hope that this was insightful, to say the least. I expect to see charts tomorrow from somebody that says, I saw this and I trusted it and it played out, or I took this because this happened and this is what happened. I lost or I won. So we can look at it and say, okay, cool. This or that or whatever it is. So no precision elements, just a standard approach for how you see continuation and confirmed direction. That one just printed on M5. Rudy, you're trading at this time of the night? Bam, 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 bam.
I didn't take the trade, but that roundup right there offered a nice 45 points. I
Wow.
read it, but I didn't push the button.
Then there's something good that came from this call. So
yeah, I just posted my analysis in the group if you want to take a look at that.
I'm
But
probably
it
going to look at it
basically
until like in the morning, to be honest. But
okay.
once it's posted, I'll see it.
All right, but it basically talks, it outlines what you were talking about, like marking your levels and all that stuff.
Indeed, indeed, indeed. So, guys, it was a good chat. Hopefully, there's some takeaway. Tomorrow, even if you don't want to explain, just post a chart and mark it up in the group. Me and anybody who's on this call will see, and we'll know that another one has awakened. So, don't want to keep you up too much. Do enjoy the rest of your night, and see you tomorrow.
Thanks, Kish. Have a good night, man.
My pleasure.
Thank you.